on Markets Radio. This is Traders on the Squawk.
Markets Radio is sponsored by Cream Live Trading.
Right. So this is the close. We are starting a little bit later, and the main reason for it is because we have too many things. We have too many material, too much material to show you up. Let me go through the first one, which is the Challenger job cuts in June. Let me just show you over here. Let me go through this one. At 7 a.m., 7:30, this morning, we had some news from Challenger Gray and Christmas Incorporation. And well, this is a little bit confusing, right? Because supposedly we have the unemployment rate for decades at a very, very low rate. But then we have the job cuts surge in June 2022 up 57%. From May, 59, from June 2021. This is the highest quarterly total since the first quarter 2021. And well, this is saying something like the US-based employers announced 32,517 cuts in June, a 58.8% increase from the 20,476 cuts announced in the same month last year. It is a 57% higher than the 20,712 cuts announced in May, according to a report released Thursday from global outplacement and businesses and executive coaching firm Challenger Gray and Christmas Incorporation. Well, let me tell you, because June marks the highest monthly total since February 21, when 34,531 cuts were announced. So this is the second time this year that cuts were higher in 22 than the corresponding month a year earlier. And this is very interesting because top industries announcing cuts. First of all, the automotive sector announced the most cuts with 10,198, bringing the year-to-date total to 15,578. And that means 155% increase from the 6,111 cuts announced through June last year, 2021. So the industry plagued by supply chain issues, that's pretty well known. And the semiconductor shortages, that's pretty well known, though. Now surging gas prices and, well, finding its footing as it pivots amid increased demand for electric vehicles. For the other side, the healthcare products manufacturers and providers announced the most job cuts this year with 19,390, up 54% from the 12,620 announced through June 21. Of the 30 industries Challenger tracks, 10 have announced more cuts in 22 than in the same period last year. So this is actually a very massive thing. So you have to be careful with this in the sense that, well, if you have a job, well, just try to take care of it. Just try to be the first one who's arriving, the last one who's going, and then just try to be a very good one at your task. For the other side, well, let me tell you, the Challenger analysis says many of the sector increasing layoffs this year are currently dealing with the housing market downturn as demand for mortgages dries up and financing becomes more difficult and expensive to obtain, Challenger said. For the other side, the technology companies are also cutting workforces as inflation and recession concerns deepen. Some firms are offering voluntary severance or, as is the case with companies like Meta and Tesla, creating environments where workers may want to quit, Christmas says. Indeed, during an internal roundtable discussion, Mark Zuckerberg predicted really predicted a difficult downturn and intimated that there were likely employees at Meta who should leave. The company is reducing hiring and increasing targets on current workers to hit goals. So, again, Challenger said while many companies are still concerned about retaining workers, others may use return to office mandates or reduced flexibility to bring employees' totals down through attrition, since flexibility and remote work options are still very much what workers want. While this might achieve a cost-cutting goal, if employers aren't strategic, they will almost certainly lose valuable talent in the process. So, well, meanwhile, nonprofits announced 1,346 cuts through June, a 69% increase from the 797 cuts announced through the same period last year. So, for the side, and I think that was the last one that Challenger said, as food and energy prices soar, charitable giving tends to be something households cut early to control their own cost. Unfortunately, this tends to cause personal cuts at these organizations. So this is something that we got around the 7.5. Well, that didn't move so much anyway. So let me go through the chart. So now you can see my dollar index, just in case. You will realize now that we are in 5 minutes. And let me go through the 7 a.m., 7.5. That was exactly when the this is the candle that it came as soon as this news just came out. Not so much, as you can see, not doing so much. So then let me just do something else, because I don't know why I do. Right. So then we have the other thing, which is let me go through again. Next, it was continuing jobless claims. So let me go right here to the browser. No, this is not. So right. So this one, the unemployment, right? The unemployment insurance weekly claims, that was around the 8.5, as you can see over here. If we go to the chart, let me put a vertical line, and then you can see what we are talking about. 8.5 exactly here. This is a very long candle, which is pretty good, and it was the result, right? It was very simple, because the continuing jobless claims was 1.375. That means 1,375,000, compared with the 1,324 million the last time. But here's coming the but. Initial jobless claims was 235,000. Last time, this is actually till July 1st. Last time the weekly one was 231. So it was 4,000 less. So it was like a little bit surprising. Not at all. But then if we go to the initial jobless claims 4-week average, well, that was 232.5 compared with the 231.75. So not a little bit bad, but not so much. So what can I say about this? Because they say, well, the report it said in the week ending July 2, well, obviously that was the first one, but it was July 2. The advanced figure for seasonally adjusted initial claims was 235,000, an increase of 4,000 from the previous week's unrevised level of 231,000. The 4-week moving average was 232,500, an increase of 750 from the previous week's unrevised average of 231,750. So the advanced seasonally adjusted insured unemployment rate was 1% from the week ending June 25th, an increase of 0.1 percentage point from the previous week's unrevised rate. The advanced number for seasonally adjusted insured unemployment during the week ending June 25 was 1,375,000, an increase of 51,000 from the previous week's revised level. The previous week's level was revised down by 4,000 from 1,328,000 to 1,324,000. The 4-week moving average was 1,335,000, an increase of 16,500 from the previous week's revised average. So the previous week's average was revised down by 1,000 from 1,319,500 to 1,318,500. So as you can see over here, the chart is showing you a little bit, just a little bit. Be careful with this. By 1,000 seasonally adjusted initial claims, by thousands are turning up, and one of the probably one of the best month it was for this one was April, right? But now it's starting to go exactly at the same level of probably the starting of this 22. So this year, it doesn't look good at all. If we move then to the per millions insured unemployment, then you will realize that then it's a little bit flat last time, but then it's obviously anyway lower than last year. So be careful with this because it doesn't look good at all. And this is very important if you are considering that we are going into, or we are already in a recession. So that was the news that we got. So then we go through, let me go the next one, which is we go this, which is the Census Bureau, U.S. Department of Commerce. The U.S. Census Bureau, this is the news release, right? And then the U.S. Census Bureau and the U.S. Bureau of Economic Analysis announced today that the goods and services deficit was $85.5 billion in May. This represents down $1.1 billion from $86.7 billion in April revised. As you can see, this tiny chart that, well, hopefully you will. I don't know if you can. Don't know how to make it zoom in on this. Sorry because of that. Well, don't know how much to do it, but I'm going to tell you anyway. Because the report says the May exports were $255.9 billion, then $3 billion more than April exports. May imports were $341.4 billion, and that means $1.9 billion more than April imports. The May decrease in the goods and services deficit reflected a decrease in the goods deficit of $2.9 billion to $105 billion, and a decrease in the services surplus of $1.7 billion to $19.4 billion. Year to date, the goods and services deficit increased $126.5 billion, or 38.4% from the same period in 21. Exports increased $197.1 billion, or 19.4%. Imports increased $323.6 billion, or 24%. So if we go to the important over here, it says, first of all, the 3-month moving average. The average goods and services deficit decreased $0.9 billion to 93.3 for the 3-month. So then we can consider that average exports increased 7.7 billion to 251 billion in May, and the average imports increased anyway 6.9 billion to 344.2 billion in May. So be careful with this, because we are comparing something, or we are considering something that as long as this inflation is going higher and higher, we have to be careful, because the average imports anyway are increasing a lot. This time increases 6.9, but then for the other side you have that the exports increased anyway 7.7. So it was, exports were more than the imports. Though you have to know that year over year, the average goods and services deficit, then the exports, the average exports increased 42.5 billion, and the average imports increased 69 billion. Over here, imports are much larger than the exports, right? So, the exports of goods on a census basis increased 2.7 billion. Over here we have the industrial supplies and materials that increases 3.3 billion, consumer goods increases 0.6 billion, and food, feeds and beverage decreased 1.6 billion. So if we just do the math, the net balance of payments adjustments increases 0.3 billion. So this was at 8.5. You already know that, right? So how did it move? Well, as you can see, this very nice candle. This is the dollar index, by the way. Let me go. Let me. I'm trying. There it is. This is a very long candle on the dollar index. It was showing you that it could going a little bit up, right? It will go higher than the previous data. That was 7.5. At 7.5, sorry. So that was the at 8.5 initial jobless claims, and we have the good and services. So we have to know that the good and services trade balance in May was minus 85.55 billion, and this is obviously worse than expected, because last time was minus 86.69, so it's still bad. The initial jobless claims 235,000. So with this data, we expected to see how the dollar, it was moving but not so much, and then you will realize that it's starting to move through the day. At this time around 9 a.m. before the opening, it's starting to go up till 107 141, but then starting to decline. Why? Because, well, for the opening we already got this data, but at the same time we are starting to have some news. So let me go through it. So we had, first of all, the US oil. They are starting to go to see some gains, and over here, let me just change this so you can see better candles, and you will realize that exactly. Let me go through the 5 minutes, then that's better. So before the opening, this is starting to go up, so the dollar is starting to move a little bit lower because of this, because the oil future extend gains, and the US crude was by $3 a barrel up. So this is important because then it went $4 a barrel, and then we had some stupid news anyway around almost 10, I think it was. Let me go here because we had the news about, yeah, like around 5 minutes to 10, we had the news that the US mortgage rates plunged to 5.3% in biggest drop since 2008. So be careful with this, because if we are seeing how the mortgage rates plunges to 5.3 in biggest drop since 2008, then we are having a problem. And just remember, because yesterday we had July 6th, we had the MBA, which is the Mortgage Bankers Association. From there, we had the news about, let me go through it because I don't remember then. It was, let me just, you can find all this information, by the way, on our website. There it is. The mortgage applications decreased 5.4% from 1 week earlier. So be careful, because now we are seeing how the mortgages are starting to cool, right? And that cooling, it means that not good things are coming ahead, right? The report yesterday, it says that the market composite index, which is a measure of mortgage loan application volume, decreased 5.4% on a seasonally adjusted basis from 1 week earlier. On an adjusted basis, the index increased 6% compared with the previous week. And one of the things that that will be the remarkable thing, right? It was the mortgage rates decreased for the second week in a row, as growing concerns over an economic slowdown and increase in the recessionary risk kept treasury yields lower. So mortgage rates have increased sharply thus far in 22, but have fallen 24 basis points over the past 2 weeks, with the 30-year fixed rate at 5.74%, say Joel Ken from MBA, which is the MBA's Association Vice President of Economic and Industry Forecasting, Mortgage Banking Association. So this is quite a big thing, a very big deal, if you're considering and you're trading if you're trading all these the mortgages and bonds. Be careful with this, right? That's something that you have to keep an eye on, and then everything it looks like, you have to consider this: is it smelling like, is it looking like, and actually, if we go we go a little bit further, we can just hear how it's barking, has a tail of dog, has ears of dogs, and it has 4 legs. So this recession, it's just like that. It's like a dog. We know that it's a dog, but we cannot say that it's a dog yet. That's a very similar to recession up to now, right? So then, we go a little bit later with the U.S. crude. So let me go then to the U.S. oil, because U.S. oil, anyway, this is the 5 minutes. So let me go to the 1 day. It's exactly doing what we expected. Look at actually this, because every single time that we jump to the chart is doing a similar thing, right? Well, one of the latest videos that I've talked about this was exactly this. Going, first of all, breaking that line around the 116 level, broke that level, was pretty good, then went again for 109, and then, this is very simple. This is going up or down. Well, let me tell you, I said at that time, this is going actually even lower. But then you have to consider this: there's no chances to see the price going lower than 94. It could go lower than the 100, yeah, but there's, if we just try to be honest, not so many chances. Well, anyway, I've told you that no under the sun going lower than 94, but then this time it crossed the 100, which is a very nice level and obviously a psychologic number or price for this asset. But the thing is that anyway, it went through our support line, or our level, which is at $94.83 with dollars with 83, then going up again. What are we expecting now, to be honest? This is actually a little bit different the last time than I just told you about this. Why? Because the pressure is still there, right? But for the other side, because we are seeing a recession ahead, then obviously the demand is just starting to shrink, right? So in that way, that lack of productivity, it could send the crude oil to lower prices than we are seeing now. Where are we seeing, for example, next level? But that's a little bit difficult. I'm not sure if that's going to happen anyway. But just in case, if you are keen on it, well, I'm just let you know where is exactly this level. It's exactly around 84. But then again, it's so hard to see this around that area, that level, that I'm just curious about if there's really someone who's making that bet going at that price. Don't think so, because actually now at this level, which is a crucial level, and that's why I made this one around 94.83 or around 95, it will be actually a very good price to jump in and buy, right? So now we are seeing too many buyers jumping in, and then don't know if we're gonna see the price going or crossing the 94 level. So looks so hard, but it will happen. So remember, we're seeing a very nice volatility, and that's why it's so good to trade for these days. So well, anyway, one of the other things that we had, it was the speeches we had. First of all, we have James Bullard, and let me just tell you one of the most remarkable things that Fitz Bullard said. One of the things he just said that the expectation of tighter monetary policy already affecting the economy, and that's pretty much easy to get, right? But for the other side, he said the U.S. job market remains robust, which is, it's true. It's completely real, right? But the problem here, it's not about that. The problem here is when we are seeing this kind of things that, for example, mortgages are cooling, and then that's why it's so important, the narrative. The narrative at this point is a key, and that's why we're expecting to have the answer from the Professor Robert Schiller, who's one of mine, professor. So it could be great actually to have his view on it, because the narrative this time, it's like a prophecy, like a self-made prophecy, because everybody's expecting the recession right now. The odds are higher than ever, but at the same time, we're seeing that, well, people, more than 37% is considering that, yeah, we're going to the recession. Well, anyway, Bullard also said that he is expecting continued expansion this year, and may see still higher inflation expectations. So he repeats that high inflation is straining Fed's credibility. Obviously, right? That's pretty obvious. And for the other side, in the meantime, Fed's Waller say, I support 75 basis points at July meeting. And he said, I'm probably in favor of 50 basis points rise at September meeting. He said, it's not clear we're going to have a recession despite news on GDP, which is one of the big deals. And he said, I think fears of recession are overblown. What do you think about it? Let me know. Waller also sees jobs report tomorrow in region of 275,000. Be careful. Just keep in mind, tomorrow is the day, right? And it's a crucial day for the equity market, for the dollar index, and almost everything, right? Because tomorrow we have the most important news about the unemployment rate and the non-farm payroll. So Waller also says, right, that plays down signal from recent inversion of yield curve. This is important. Let me go and show you with the with this. Let me go to a date so you can see better, or even just let me put the lines so then you will realize better. This is the, let me go with 1 year. This is the 10-year yield. So let me go then to the 2-year yield. No, just give me a sec. This is not. So we're gonna go through the US 02. Why is it? Can't find it. I don't know why. Right. Exactly here. So if we are going then to, you can realize instantly that the 10-year yield is currently at 3%. Then the 5-year yield 3.045, and be careful with this, 30-year yield at 3.2. This is very important, as long as you can see over here that anyway 5 years is below the 10-year yield, right? But so close that we can see that inversion a very sooner than we expected. Look at this, for example. This is year to date. Year to date, the 5 year so close, 30 years so close. So we have to be, maybe it's a new phenomenon, I don't know, but it looks like, yeah, the recession is coming, but not yet, because the yield curve. Just remember that this is a very good a good indicator to predict a recession ahead, right? Every single time that we have a recession, we have like an inverted yield curve, like around 12 months earlier. But this time is not happening, right? It's close, but not yet, right? So it's anyway a very similar phenomena. No, it is not. It is a new one, perhaps. So well, anyway, let me just go through the other. Where is it? Right. So for the other side, Waller said, "I think we have a good shot at a soft landing." Don't know. I'm not agree with it. Probably you neither. He says something doesn't seem right with GDP data measurement. Well, I'm agree. Don't think inflation expectations are already uninsured. Don't know. And for the other side, need to see core PCE is low to close to 2.5 or 3% by year end. To slower stop rate rises, need core PCE inflation closer to 0.5 to 3%, which is a very hard to see this year at least. For the other side, James Buller said, rather than stagflation, better bet is growth will slow to trend. Inflation will come under control rapidly. We've got a good chance at a soft landing, Buller said. don't know. I mean, this could be not actually a very soft landing. It could be a very rough one. And well, Buller also said mortgage rates are at this point not that high, but not surprising buyers are backing off a bit. And in the meantime, Waller said fall of cryptocurrency having no impact on financial system. And be careful with this. Let me just go instantly to the Bitcoin, because Bitcoin is already, let me just put the candles. Bitcoin is already at 21,629. Am I a buyer of this? No, I don't like cryptos. I don't like, because I do not get 100% right. I do not understand this very well. But then I know it's such like an internet boom, so it could be like a very great deal. Don't know. But then at these prices, no chance. Sorry because of that. But to me, it's very, very simple. I mean, you are trying to compete against central banks, right? You are trying to compete with fiat currencies. That's not real, man. That not because you don't believe or you do believe on it. No, it's not about that. It's about they are gonna be in charge on this because that's their deal. So simple as that. And if they can do something, right, to put you out of that, well, they will. So simple as that. So then, cryptos, yeah, I do believe in cryptos, but then it should be backed by something, by a central bank or by Standard Gold or whatever. But it should be backed by something, not like just there, because Bitcoin at the end of the day, it's backed by thin air. Simple. Just buyers that they are believing. And that belief, well, sorry, but it's just thin air. So simple as that. So, well, anyway, is it really going up this? In the technicals, I will say yes. My critical levels of this are exactly here. Let me go with the line, because then you will get, then there it is. One of my levels, it was exactly at 19,119, which is, well, it's still there. Then my next level going down is 17,151. Why am I just putting levels down and not up? Because I do believe that this is already a time to see how this is failing. So simple as that, right? Though I see a very massive chance to see the price higher. And if you're wondering why, considering that I don't like crypto and I don't like Bitcoin, I do prefer others just in case. But if you're wondering about Bitcoin, well, I'm not a bull, but then, yeah, I'm saying that this is definitely going up. Why? Because this was the critical level, 19,000 was respected. Now it tested twice. Be careful with this. It tested twice. But if we go then to the candles, and let me just make a zoom in, I'm a buyer. I will be a buyer, right? Not because I do like it, because in the technical, I'm seeing that it is going up, right? Then, what else? Well, one of the latest thing that Waller said was, we'll be aggressive on hikes. We'll have to take risk of causing some economic damage. And Buller say possible rate cuts could follow once inflation moderate. Well, that it's fine. I'm completely agree. And that's it. And that was all. Nothing else. Nothing else about the inflation or interest rates. So let me go then to the upgrades that this morning we had. Let me start with let me go through. Well, if you're working on anyway on copper, yeah, we are seeing how this is falling to very critical levels. If we go through the weekly chart, you will realize, look, am I something like like a prophet, or am I like something like, I don't know, am I kind of witch or something? Don't know. Am I kind of magician? No, I'm not. But then you will realize that the price is doing a very similar thing that we are expecting. On this case, was exactly that. Copper, if you're seeing over here, we had that. Don't know if you can go through it, but anyway, we had the price coming here to this level. Then I've told you we had just only two chances. Then now let me go with the candles. This is better. And I've told you, well, this is going to this level around 4. So this is a crucial level to see if this is going up or down. Then I've told you, obviously the odds for in the very short term is going up, but then I'm seeing that this is going and falling. And actually, look at the fall; it fall exactly to our level. So if you're working on obviously on trading, then anyway, you can find more curses, but don't know if it is already there. But then you can go through creamlivetrading.com, which is our sponsor, and then you can get obviously these trading curves. But then only because of that, because the trading is doing exactly what we are expecting, we can just call it top-notch trading curves, right? That's Cream Live Trading is our sponsor, so you can go there, creamlivetrading.com, and then you'll realize if they have courses or not. Then you will realize instantly over here that the price went through our target 3.5, 3.55 to be a little bit clear. And then if we make a zoom out, we do still have very key levels. This time, because we have a very long candle and that was a very important level, then we are seeing a rejection probably, but again, we are still seeing how the price is dropping and probably to the next level, which is $3. That's copper. Now, let me go then to the next one, which is because this morning we have, it's pretty weird, but I'm going to give you the most important anyway. JP Morgan said that bunch limited currently at $88 with 75, right? They say that they upgrade to overweight from neutral with a price target of 106. 106. Let me go then to 106. Let me put a candle, or no, I'm gonna show you then with this anyway. It's fine. So 106 around here. So 106. Right. So now currently this company, right, trading at $88 with 75 cents, JP Morgan upgrade the overweight, to overweight from neutral with a price target of 106. Anyway, you have to remember that one of the latest time they had from 130, right? But anyway, it's a very good price because then you have a very nice upside chance if you're considering that you're in a place, for example, your stop loss below 84, and then you're risking just only $4 around, or $5 to get, in order to get almost 20, right? So it's pretty good. Yeah, I think so. $18 compared with 4 or 5, it's pretty good. So that's something that you have to take care of anyway, because if they are upgrading every single time, the JP Morgan is saying the price most of the time is missing the price, but then anyway is pushing the price up. So pretty good to see. One of the others that I'm keen on, not in everything, but let me just go to CRNC. I think that was no, not so much. Forget about that. No, there was too late. Why I've shown you that? Because RBC Capital upgraded to sector perform from underperform with a price target of $27, but it's already there, so I don't care. So let me go then to EDR, which is Endeavor Group Holdings, and then trading currently at $21 with 87 cents. And let me tell you, because Citigroup upgraded to buy from neutral with a price target of 20. Listen to this, $25. So let me just put the over here, around here, 25. Let me just put the a text, which is this is credit. No, sorry, Citi. So Citigroup. Price target 25, and we're gonna be a little bit more precise. Right, there it is. So Citigroup is telling you they are having a price target of 25. Then you will realize that where are you placing your stop loss? Not going through probably right away, but then we have this, which is like a kind of crucial level to break out, and it did anyway. Look. Well, no, not at all. But then it's pretty close to it. So if it breaks that level, then you have a chance to go for $3 anyway. Your stop loss, it should be a little bit tight, and it's not a very good deal. It's not a very good trade, because then you're looking like almost 101. But then anyway, it looks like it's going there, right? And I do think that it could go even higher, right? If we are going here, and let me just tell you exactly, because my evaluation is markets radio for value for this. I don't know if we don't have it anyway at this point, because I think the last time we just decided that it's not actually a very good one to trade, but it was bearish, completely bearish. So that was just we just preferred to say no. Loading. This is EDR. No, we don't have the data for this time, at least. So forget about that. Then, well, we are seeing the chance to go to 25. That's Citigroup that is saying that. So let me go then with the next one, which is also a Citigroup, but this one is LAMR, which is Lamar Ad Company, trading at $91. And they are saying 108. And this is Citi again. So Citigroup. Well, just Citi. Come on, get a grip. There it is. So now currently trading at $91 with 72. Well, the market is already closed. Well, you know that. But then, if you're placing your stop loss, right, even quite tight, it's not a bad trade. It is not a bad one, right? So let's help, obviously, to the market do their job. But placing a stop loss around here, even if you're placing it around here, this area about $86, right? So then you have the chance to get a very nice trade to go higher. Is it a good trade? You know what? I do like it. I like it. Why not? Right. So this is Citi. This is LAMR. And let me go then with, I don't like this one, but I'm going to show you anyway. NTB, which is Bank of NT Butterfly. Butterfield and Son Limited, which is currently a 32, right? 32, and Wells Fargo is saying going to 38. Where is it? There it is. So then you will realize over here, NTB, Wells Fargo, they're saying they're upgrading to overweight from equal weight with a price target of $38, which is not bad at all, right? Over here. So this is Wells Fargo saying that it's going then to 38. There it is. Is it a very good trade to make? You can pull the trigger and you will have a very nice trade. If you're pulling the trigger around here, you will see how you can get at least 18, which is not bad, 18% of return. And then even if you're risking a very tight stop loss around here, 6%, why not? Yep, it looks all right. 6, you're risking 6%, but then you're going for 18%. So not bad, not a bad trade. Then we have one of the other that I do like. We have too many, but remember, we just take a look about that early morning before the opening. So if you are not a golden member still on our Markets Radio golden membership, then you missed that. But then if you are, well, you already know that we had too many. But this time anyway, I'm gonna give you for free just one more. Here it is. TS. TS, right? Jeffries, and I have to make a zoom out. So then you will realize what we are talking about. Look at this. What am I doing? Because that doesn't exist, I had to come here. So then Jeffries is saying that TS, which is a very nice company, but then they are saying that they are upgrading to buy from a whole position with a target of $46 from 35.7. So they had a target of 35.7. Currently now 24.9, and they are saying that this is going to 46. This is why it's so important to see what the big ones are doing, because then you will realize that most of the time this is not real, right? And they are just trying to survive and just read off the papers what they had, or they have so probably many shares on their books that, well, they need a push. That push, if it goes through that 46, then yeah, well, that could be a very good trade. But then it's a very, very steep downside move. That really, I will not pull any trigger on this, to be honest. No any. But anyway, Jeffries, I'm just telling you, Jeffries is saying, yeah, we're upgrading this and our price target is 46. No. That's up to you. It's your own decision anyway. But then anyway, that's it for the upgrade. Let me go then for the downgrades, because we had too many, but I'm going to give you just the most important now, because I do like it. I'm gonna show you the this is a very cheap one. Anyway, CNSL, which is Consolidated Communication Holding Corporation, at 6.98, right? 6.98, and Citigroup just downgraded to sell from neutral. Yep. So they're just targeting $5, which is here. And this is Citi saying that going then their target price target is at $5. Now this is at 6.98. Is it a good trade? Is it a good deal? You know what? It doesn't look bad at all, because I will actually take actions on it. But anyway, it's completely up to you. I'm not so sure that it will go so high. But then, well, I'm just telling you, Citigroup already said no. We're short in this. Then anyway, what else? Bank of America. Bank of America said that Kohl's Corporation, which is KSS, right? They said that currently trading, just in case, the current price is $28.26, right? And Bank of America Securities downgraded to underperform from neutral with a price target of 26. But then here's the importance. They are saying 26, which is a very pretty close deal anyway. 26 over here. 26. Let me just put over here. Let me type Bank of America 26. And here's the deal, because this is the importance of knowing what they are doing. Bank of America Securities downgraded to underperform from neutral with a price target of 26, but they did it from 50. So the previous target that they had was $50, right? Is it a good deal? At 50, it doesn't look like, right? So let me then can't find that. Here it is. Sorry, I don't know why it's taking too long. Right, I got it. Sorry because of that, but it was quite important. Now, exactly at 50, what they had, Bank of America. Bank of America now from 50 is saying we are downgrading this from neutral to underperform. So from 50 they are going 20 to 26. But let me tell you that the last time that they said, be careful with this, just try to hear well. Last time on September 30, Bank of America's Bank of America Securities said we have a price target of 48. So let's go to September 30. So then you will realize what they are doing. September 30, right? This vertical line, right? And they say 48. So let me go here. $48. That was the price target at that time. They said exactly that. At that time on September 30, they said we are downgrading from buy to underperform. So then, if you just take a look about this, 48, then yeah, the price went a little bit lower, but then look, actually, it went through over $60 a share. Time after, January, 62, even 64, right? Well, let me tell you that then, at that time around June, no, it was January, Bank of America also said we are downgrading. So let me go then to January. Vertical line again. January 10. That's it. They said at this vertical line, they said, again, we are downgrading from 55 to 50. And it was around 40. So be careful actually with this kind of recommendation from Bank of America. Why am I showing you this? Because this is the importance to see what the big ones are doing when we're having rough days like this. When the economy and the markets are going in a bearish mode, then you have to be very careful what the recommendations are, where it's coming from, and then if you are agree with it or not, it's up to you. But then it's so important to have that, or just try to weigh what they are saying. And the main reason is this, right? If they are telling you we are downgrading this, but then look, the price was exactly there, the target was 50, but then the price was trading around 40, and then it went roughly just a month after to 60, right? It went $18 plus compared what they said first, right? So then it's important this because Bank of America is in a very good I don't want to say that word, but they're not doing that kind of analysis that you can just jump in so easy, right? And with some companies, they are not doing well. This is one of them, right? With this company calls, right? We're gonna jump that. We go for the next one, which is it's gonna be the last one because it's too late now. And then JP Morgan said, let me just go here again to Otis Worldwide Corporation. JP Morgan said currently trading, it closed at $70 with 0.09. And JP Morgan said downgrading to neutral from overweight with a price target of 62. 62. Be careful with this, 62, because JP Morgan every single time, yeah, they are doing better. Right? So this is 62 around here. 62 only, and we're going to place over here JP Morgan. So JP Morgan saying that this price is going to 62, or well, at least that's the price target for them, right? And then he's telling you that they are downgrading to 62 from 100. So they had 100 as a price target that never went there this year. No, the last one, right? Never. So they had a price target of 100, never went there, never been either close. Anyway, 92, that was the maximum. So forget about that. And then they're telling you that this is going to 62. Is it really going to 62 anyway? On my way to see it. It might be. Or yeah, well, already broke this level, which is an important one, 68. So yeah, it could go to 62 easy. Yeah, could go there. It could go even lower, but then makes no sense to tell you right now, because that's not that type of trade to do at this time. So anyway, JP Morgan say that it's their price target for this, they are downgraded to Otis to 62. So sorry Otis, but nothing else to do. Then what's the other one? It was pretty. Here it is. So Wells Fargo to OZK Bank. Wells Fargo said literally downgraded to equal weight from the overweight with a price target of $42. $42. They are downgrading this, but anyway, with a price target of 42, and then they had previous 58. So 42. So 42, 42, 42, and then this is Wells Fargo, so let's place Wells Fargo over here, and only 42. So this is it a very good deal to jump in or trade like this? I don't think so. Don't like it at all. And then, well, you have the chance. It's always up to you. If you already got there and you already jump on this one, fine, good for you, because yeah, you have some chances. But I do prefer to have a better price, and these clusters don't like it so much. So no, I do prefer to skip this kind of trades. And that's it. That's the 3 and 3. So I think we're done. Just in case, well, you already know about this. The dollar index went heavily up. Don't know if you are already in, but then just in case, look at this. If we move to the daily chart, it will be better. So then you will realize what's doing. So high. But then remember, do we have a deal to make over here? Yes, do we? We do. Here. That's a very nice level actually to see if we are taking any action on it. Is this really going a little bit higher? Yeah, why not? But then it's so hard to see it. Let's move with lines and see what to see under perspective. That's it. And I do think that it could go even around 108 easy. Why not? 109 it could be. 110. too hard. But then, yeah, that could be so interesting, but at the same time so risky for the dollar as a currency, because if we're going through 109, 1010, sorry, 1 and 10, we have problems, because then as higher is going, well, it means that lower then is going. So it's risky, yes, it is. Don't like it in that way. So that's it. That's all. Hope to see you again tomorrow. And tomorrow, because it's Friday, we are seeing obviously the currencies. We are seeing the forex market. So if you're working on it, well, stay tuned. And well, today we're just making this free. That's why this music. So anyway, if you prefer to go to the next one, or well, just jump to the website. They are all of them. So well, that's it. Hope to see you soon. Have a good day. See you. Bye bye.
On Markets Radio, this is Traders on the Squawk.
Markets Radio is sponsored by Cream Live Trading.